Good morning or evening, wherever you are, and thanks for joining us for another deep dive.
Always a pleasure.
Today, we're going to be looking at AppLovin Corporation,
Yeah, this is a company that, well, they had quite a year.
to say the least.
Yeah, to say the least. So for those of you who maybe haven't heard of them, AppLovin is a US-based company. They were founded in 2012, went public in 2021.
And they operate in the software and technology sector.
Right, and their primary focus is mobile app marketing and monetization with a particular emphasis on games.
Now, what really caught our eye and why we're doing this deep dive is that AppLovin was actually the most successful tech stock in the U.S. in 2024.
Yeah, pretty impressive, right?
It is.
Especially when you consider they outperformed even some of those big AI giants everybody's talking about.
Yeah, so how did this company that focuses on, mobile games and apps,
Yeah.
how did they pull this off?
Right. Well, that's what we're going to try to figure out today.
Exactly. So let's start with a quick overview of what AppLovin actually does.
Sure. So they have two main segments to their business. First, you have their software platform segment.
Okay.
And this is where they provide tools for advertisers to reach their target audiences and optimize their ad campaigns.
So things like helping them decide where to place their ads, how to target specific users,
Exactly.
making sure those ads are actually effective.
Yeah, and they have several key products in this segment, including App Discovery, Max Adjust, and Whirl.
Whirl, that's an interesting one. I know they've been making some moves in the connected TV market,
Right, they are.
which is definitely a growing area.
Huge growth area. And then the second part of their business is their apps segment.
Okay, so this is where they actually operate their own mobile games,
Exactly. And these are primarily free-to-play games.
which makes sense because that's where a lot of the monetization opportunities are in the mobile gaming world.
Right, it is.
So they're kind of eating their own dog food, so to speak.
Exactly.
They're using their own platform to market and monetize their own games.
Yep. And this gives them valuable insights that they can then use to improve their platform for other developers.
So they have that kind of real-world feedback loop going on.
Exactly. And, we got to emphasize the scale of this company. They have over 1,745 employees.
Wow, that's a lot.
And they're led by their co-founder and CEO, Adam Foroughi.
So they're not just some small startup anymore. They're a major player.
No, they're a major player.
Now let's get into some of the recent news that has been driving their stock price.
Right.
So just earlier this month, AppLovin released their Q4 2024 earnings, and they absolutely smashed expectations.
They blew it out of the water.
Yeah, their stock surged over 20% after the announcement.
Yeah, and it was largely fueled by that incredible 43% year-over-year revenue growth.
So they brought in $953.3 million in revenue just in that quarter.
Yeah, a pretty phenomenal number.
Now, a big part of that success seems to be attributed to their AI-powered advertising software, AXON.
Right, and we've mentioned it briefly, but we should probably dive a little deeper into what makes Exxon so special.
Yeah, for sure, because it really seems to be the heart of their recent success.
It does.
Yeah.
So essentially, AXON uses advanced machine learning algorithms to analyze massive amounts of data.
Okay.
And it uses that data to optimize ad campaigns in real time.
So it's like having a super smart assistant that's constantly tweaking and refining your ads to make sure they're performing as well as possible.
Exactly.
Now, what's also interesting is that AppLovin has been expanding AXON into new categories beyond just mobile gaming,
Right, so they're not just relying on one market for growth.
which is smart because it allows them to diversify their revenue streams.
And tap into new, potentially very lucrative markets.
Exactly. So they're not putting all their eggs in one basket.
No.
All right, so we've talked about their business model and their recent success, but let's dive into the financials a bit
Sure.
because ultimately that's what really matters to investors.
Absolutely. So if we look at the revenue growth from 2019 to the projected figures for 2026,
Okay.
we see a very clear upward trajectory.
And it's not just small incremental increases either.
No, these are significant year-over-year jumps in revenue.
Exactly. And their earnings per share, or EPS,
Right.
saw a massive jump in 2024. And projections indicate that this trend will continue into 2025 and 2026.
Which means that they're becoming increasingly profitable.
Not just growing revenue, but also managing their expenses effectively.
Exactly. And that's reflected in their healthy gross and operating margins.
Now, another positive sign is their strong free cash flow generation.
Right, which means they have a lot of options when it comes to reinvesting in the business, buying back shares, or even distributing dividends.
So a lot of financial flexibility thanks to that strong cash flow.
Exactly. Now let's talk about valuation, because this is where things get interesting.
Okay.
AppLovin currently has a price-to-earnings ratio, or PE ratio, above 100.
Now, that's a pretty high number.
It is.
It means that for every dollar of AppLovin's earnings, investors are willing to pay over $100 for a share of the company.
Right.
So that indicates really high expectations for future growth.
Right. But the question is that optimism justified?
Exactly. And we also need to look at their debt-to-equity ratio, which sits at 3.26.
Okay.
So this tells us how much debt they're using relative to shareholder equity to finance their assets.
And a high debt-to-equity ratio can sometimes be a red flag?
It can be. But as with all things in finance, context is key.
Absolutely. You can't just look at that number in isolation. You have to consider their industry, their overall financial health, and other factors before jumping to conclusions.
Exactly. So we'll need to dig a little deeper to see if that debt level is something to be concerned about or not.
Agreed. Yeah, so to get a better sense of whether that high PE ratio is justified, let's see what the analysts who follow AppLovin closely have to say.
All right, so what's the overall sentiment? Are they bullish, bearish, or somewhere in between?
Well, the sentiment's actually quite positive. 19 analysts are covering AppLovin right now, and the consensus rating is a buy.
So the experts seem to think AppLovin is a good investment. But I know you mentioned earlier that there's a pretty wide range when it comes to their price targets.
Yeah, that's where things get interesting. The price targets from these analysts range from a low of $66 to a high of $630.
Ooh, okay. There's a huge difference of opinion. I mean, we're talking about a potential upside of almost 10x on the high end versus a significant downside on the low end. What could possibly be driving such varied opinions?
Well, I think it really just highlights how difficult it is to predict the future in an industry like tech.
Yeah.
There are so many factors at play. Competition regulation, technological advancements, all of these things can have a major impact on a company's trajectory.
So even the experts can't seem to agree on what the future holds for AppLovin.
That's right. However, the average price target among these 19 analysts is $375.95,
Okay.
which actually suggests a potential decrease of about 20% from where the stock is currently trading.
Interesting. So even though the average price target is lower than the current price, the most bearish analyst, the one with the $66 price target, still sees the stock as being undervalued.
Right.
So while there's a wide range of opinions, there seems to be a general consensus that AppLovin is worth more than what it's currently trading for.
Yeah, I think that's a fair assessment. Now let's shift gears a bit and take a look at the revenue and EPS forecasts,
Okay.
because those can give us some insight into the growth trajectory that analysts are anticipating for AppLovin.
So what are the experts predicting for AppLovin's top and bottom lines?
Well, the forecasts are projecting continued strong growth. They're saying that revenue could potentially hit $6.98 billion by 2026.
Wow, almost $7 billion in revenue.
Yeah.
That's a massive jump from their current levels.
It is, and their earnings per share are also expected to continue climbing, which further supports the positive outlook on their profitability.
So we've got strong historical performance, impressive revenue growth, solid profitability, and a largely positive outlook from analysts. But are there any risks or challenges that we need to consider when it comes to AppLovin?
Oh, of course. You can't have a deep dive without looking at both sides of the coin, right?
Right.
So one major factor to consider is competition. The mobile gaming and advertising markets are incredibly crowded.
Very competitive.
There are some really big players in those spaces who are all vying for dominance.
So AppLovin can't just rest on its laurels. They need to keep innovating and adapting to stay ahead of the curve.
Absolutely. And they also need to keep a close eye on the regulatory landscape.
Yeah, the tech industry as a whole is facing increasing scrutiny from regulators globally, particularly when it comes to things like data privacy and antitrust issues.
Right. And any significant changes in regulations could have a direct impact on AppLovin's business model and profitability.
For sure. And then, of course, there's the ever-evolving consumer landscape.
Yeah. The mobile gaming world is constantly shifting. New
Yeah.
trends and new technologies are emerging all the time.
It's like trying to hit a moving target.
It is. So AppLovin's continued success will depend on their ability to anticipate and adapt to these changes.
So it seems like AppLovin had an incredible 2024, fueled by their smart use of AI in a high-growth market. But their ability to keep this momentum going will largely depend on how effectively they navigate those potential challenges we just talked about.
I think that's a great way to sum it up.
So after taking this deep dive into AppLovin,
Hmm.
what's the big takeaway for our listeners?
Well, I think if you're interested in the potential of mobile gaming and advertising, AppLovin is definitely a company worth keeping an eye on.
For sure.
They seem to be in a good position for continued growth.
But as we discussed, there are some risks to keep in mind.
Right.
Their valuation's pretty high.
Yeah.
There's a lot of competition in the market,
Mm-hmm.
and there's always the chance of new regulations that could impact their business.
Yeah, those are all important factors to consider. So is AppLovin a good investment?
Right. Should people buy the stock?
Well, ultimately, that's a decision each individual investor needs to make for themselves based on their own goals and risk tolerance.
Exactly. We're not giving financial advice here.
Right. All we can do is provide you with the information you need to make an informed decision.
And hopefully this deep dive has given you a better understanding of AppLovin, their business, and the factors that could affect their future.
Exactly. But it's important to remember that things can change very quickly in the tech world.
Oh, yeah.
So what we've talked about today is just a snapshot in time.
Right.
Staying informed and being adaptable are crucial for any investor.
Absolutely. Couldn't agree more. Well, this has been a fascinating deep dive into the world of AppLovin.
It has.
Thank you again for tuning in. Appreciate all the support, and